Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, Thursday, 26th of October. Today, the European Central Bank gave its interest rate decision flat. It's after 11 times hiking rates, we are now pausing. Christine Lagarde said that most probably this is a pause. They want to see data. They are data driven, same as the Federal Reserve. But this pushed the market a little bit. But at some point, European market has its own legs, and we have to focus on US data. And that data, oh boy, in other circumstances would be pretty good. But good news is bad news for inflation. Strong economy is a strong and more difficult time to fight against the inflation. Look at this. GDP growth rate quarter over quarter, 4.9%, blowing up the 2.1% previous and the expectations of 4.3. So huge growth, and huge growth means strong economy, and a strong economy means perhaps higher rate for longer. Another reading, the price index 3.5%, coming up from the 1.7 we were expecting an increase, and we blow up again GDP. So two big GDP numbers blowing out everyone's expectations. And on top of that, the only good news, but in this context is we have to really take it with a grain of salt, is initial jobless claims. We got a little bit of increase, more than expected. That's good. Jobless claims means signs of maybe cool down on the labor market, and continued jobless claims also increasing. 1790, we were expecting 1740, an increase from the previous one. Finally, core PCE prices cooling down, and the PCE prices a little bit of an uptick, but real consumer spending 4%. So huge consumer spending, huge GDP growth, and big PCE prices quarter over quarter. Those are estimates, means that the Fed basically is going to continue battling against inflation. We don't expect these probabilities are going lower. We don't expect a hike next meeting, but look at this, higher for longer until May or June next year. They don't think Fed is going to cut any rates. So higher for longer, strong economy, it's bad for the markets because we are not seeing that progress. We are not seeing the economy really slowing down. We see big consumer spending, we see huge GDP growth, and that's really bad for inflation. So recession is going to be dodged, most probably, but the battle against inflation is pretty damn hard. In other things, earnings. Yesterday, Meta reported earnings and IBM reported earnings. Both really crashed estimates. Meta with basically beating top and bottom lines with revenue up 23%. Wow, that's huge. And monthly active users on top of estimates, and average revenue per user higher than expected. Daily active users higher than expected. Revenue higher than expected. Earnings per share, big beat. It's doing better than its competitors, Google, Microsoft, and all those, YouTube. But I think investors in this context maybe are protecting themselves, and we are going to see that in the charts that Meta really sold off. They had good earnings, but maybe it's just buy the rumor, sell the news. IBM also strong sales up 8%, beating top and bottom estimates. IBM showing strength, so more fuel on top of some investors that are willing to invest in these companies. So if we are moving to the charts, we are going to basically see that, let me here. we are going to see, okay, that the Nasdaq really gap down this overnight. This gap down, and sometimes I mentioned a lot of times that during a gap down, we have to really track all levels. This is yesterday's low. We gap down, we try to find some background, some bottom, and into the open, we squeeze and look at where we topped. We filled the gap and we rejected value from yesterday. So really big opportunity for a short up here. That would have been like 200 plus points in hindsight. But the next level I was watching, it was pre-market low. We tried with this candle. This is a 30-minute chart, by the way. With this candle, we try to find some legs. Look at that we hold this close, but then big resolution to the downside. On the 1-minute chart, it's even more critical. Look at this beautiful short up here against, for example, settlement or yesterday's close. Really good ratios from here to at least some kind of target like pre-market low, full swing down. We got some retests like this one, failed, and then this was the name of the game, breaking down. So right now we are still looking for some buyers. Let's check the daily because we have the 200 moving average here at 14,235. That's embedded in my charts right here in this white line. And we are far from that. But this volume that we got here, this volume on this push, and we are trying to hold this, means that some buyers are willing to take the reversal back at some point. I think this zone would be ideal. Good ratio, short would need to cover at some point, and I think some buyers are willing to at least buy for swing trades or even into the afternoon. But don't get me wrong, we are super red. Look at Apple -3%, Microsoft -4%, Tesla -3%, Amazon -2%, Google -3%, Nvidia, Meta big into the open, but then look at this sell-off. Huge. Look at this sell-off. This is just insane volatility. Then some reversal. I mean, you have to have risk management into account in this market because these are wild moves. Something worth mentioning, banks are quite in the green and IWM was holding better than expected. Now only -0.27%. Obviously we have this move down, this retracement, but overall in comparison with the Nasdaq, I mean, we are better. Small caps are better. Big tech companies are really being destroyed. And I told you, this kind of leg down up was worth watching for the bear flag resolution into the break of support. And that's exactly what happened. I didn't want to take that because basically this triple bottom was pretty nice and I didn't want to short the Nasdaq given the upcoming earnings, but I think this was quite decent. Now, the important question is, where do we find buyers? So right now on the NQ continuous chart, I'm still watching this 14,200 level, 240. We are below that. And then we have, remember, this is a continuous chart, it's not contract based. We have the 200 moving average in the continuous chart at 14,016, basically flat, 14,000 flat. That's not the same level on the NQ. I would like the NQ to really close above this 14,235. That's the 200. So either way, we need to find some buyers at some point in this daily moving average. That doesn't mean that we have a relief rally and then continuation lower, but that's another thing. For now, we need to find some legs. Right now, we are seeing buyers committing to this trade that I was mentioning. I think these are good ratios. Shorts need to cover, and some buyers would like to follow that cover into at least VWAP, that is up here, 200 points away. So good ratios into the afternoon might worth watching, but remember that this at 14,235 is a daily 200 moving average. The rest, dollar was quite weak today. It's surprising the exact level that dollar rejected. We broke, we tried, and we failed. So dollar getting some weakness, yields in the red. I mean, there's some opportunity in the Nasdaq to buy some dips today, but just have huge risk management, tight stops. You have to be pretty good to trade these reversals. I like these reversals because they offer a very good ratios on the trade. So if you want to watch those for the afternoon, I mean, I think they are really worth. But pay attention to dollar. We want to continue seeing this kind of weakness into 106.7 and then maybe to 106.5. If it continues higher and tries to break again 106 daily pivot, I mean, dollar strength is basically equities weakness. And I think that's all. Yields in the red, dollar weakness, Nasdaq selling off due to earnings provide a decent, let's check the 5-minute chart. They provide a decent trade opportunity. We are too oversold today, but that doesn't mean that we might have some choppiness. We might consolidate down here without any kind of retracement to pre-market low, for example. But I think it's worth at least watching into this afternoon some kind of move towards the 200 moving average on the daily time frame, the pre-market lows, or even VWAP. Point of control is up here. We are seeing some kind of support down here, so your stop's pretty tight, your risk is pretty tight, and I think that's really good if you are willing to risk and watch the market into the afternoon. If not, just take those gains if you were short really big gains today and wait for tomorrow. There will be plenty of opportunities, so don't worry. 2 big days today to the downside. We have to be really careful. Watch out. And that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel because I upload videos like this one every single day for market updates, market recaps, and market forecasts. I focus on the Nasdaq. I cover a lot of markets to find correlations and convergences to really explain you the kind of opportunities that I usually take for my trading. So as always, discipline and risk management are key in these times. To trade these markets, you really need these 2 skills. Pay attention to that, develop those good habits, and you will be successful. Stay safe, everyone, and see you tomorrow.